Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Welspun Corp. Our analyst maintains positive rating on Welspun Corp with an upside potential of 20%. Welspun's strong global presence, that is US, Saudi Arabia and India, makes it well placed to tap growing global opportunities in the line pipe business, especially from the oil and gas sectors. Welspun has multiple re-rating catalysts given its robust core line pipe business outlook, potential exponential growth from DI and SI pipes, B2C foray through Syntex, TMT bars and targets to turn net cash positive over the next couple of years. The outlook for line pipe remains strong given increased government capex, strong saw pipe demand in the US and Saudi JV full capacity booked. The DI pipes market is expected to remain strong given multiple government schemes focused on water infra projects. Management maintains its impressive outlook with revenue guidance of 15,000 crore and EBITDA guidance of 1,500 crore, implies 54% and 86% year-on-year growth respectively for FY24. We expect Welspun to report a robust CAGR of 64% in its EBITDA and 88% in its PAT over FY23 to FY26, along with an improvement in ROE to 21% in FY26. The stock trades at an attractive valuation of 5.2 times its FY26 estimated EV by EBITDA. Next on radar is Tech Wabag. Our analyst maintains buy rating on Tech Wabag with a price target of Rs 630 as companies focus on technologically advanced EP projects and increasing share of O&M contract would improve margins, cash flow and working capital cycle. Order backlog stands at Rs 10,942 crore, which is 3.9 times trailing 12 months revenue, and order pipeline is promising across India, Russia, Middle East and other African countries. The company believes Middle East market will pick up pace and is expected to come up with large order focused on water. The company has placed bid for orders more than $1 million. Further, the company is focused on margin improvement and cash flow generation and is on the cusp of a healthy growth trajectory in the medium to long term. We build in revenue and adjusted PAT CAGR of 9% and 15% respectively over FY23 to FY26. The stock trades an attractive price to equity of 9 times its FY26 estimated EPS. Next we cover SP Apparels. Our analyst maintains positive view on SP Apparels with an upside of 17% over the next 12 months. SP Apparels Q2 numbers were sequentially good with revenue growing by 18% to Rs 292 crore. EBITDA margin higher by 137 bps to 15.9% and 90.9% rise in PAT to Rs 28.6 crore, driven by a good show by the garment and retail division. The garment division has an order book of Rs 410 crore until February 24. Management is confident of a strong outlook for the next 3 years. Margin guidance maintained at 18 to 20%. SP Apparels UK is expected to be back on track in FY25 and deliver a strong performance in FY26. Retail business is likely to grow with the scale up of new brands. The stock trades at an attractive valuation of 12 times FY24, 9 times FY25 and 7 times FY26 estimated EPS. For more detailed disclosures and disclaimers, please refer to our research report or contact our nearest branch. Please read the risk disclosure document issued by SEBI and relevant exchanges and terms and conditions on sharekhan.com before investing.
Thank you for watching. To keep up with the latest from Sharekhan, make sure you subscribe to our channel. You can also download the Sharekhan app for all your trading and investing needs. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.